$10 trillion Charles Schwab says they are going to launch crypto trading. This is bullish and huge news. Another Wall Street domino has fallen. And Bitcoin moves past $87,000. Are we seeing the move towards the next run up? I'll share all the details with you. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we're seeing some movements on Bitcoin. It's currently over $87,000. When you look at the daily chart, we are seeing higher highs and higher lows. So we're stair-stepping our way out of this hole. And we're seeing some strength here. It's really good. So Bitcoin is very close to passing the 200-day moving average. What have I told you guys? When we are above the 200-day moving average, we are certainly and definitively in a bull market. When we are below it, if Bitcoin hangs out there too long and starts going into a downtrend, we're in a bear market. Now, Bitcoin has been teetering right below it, kind of knocking on the door of a bear market here, but looks like it's starting to come out. This is what we saw last summer with the Japanese yen carry trade situation. The markets all crashed, similar to what took place with the tariff stuff over the past couple months. Stock markets, crypto, everything crashed. Same thing happened last summer. Not as bad, of course, but Bitcoin stayed down there, boring, chopping sideways, even dipping down again and retesting supports. Then it made its way out in Q3, and then Q4 melted phases. And we saw a lot of altcoins run up as well. The same type of setup is happening here. This is the data, not my feelings or emotions. There are going to be people in the comments, oh, it's a fake out. It's still a bear market. You guys are idiots. But they won't give you data. They'll just give you sentiment. I'm not here for the herd sentiment, because the herd right now thinks everything is over, right? They look at the stock market, they look at everything that's going on with tariffs. But as I've been telling you guys, there will be a resolution to the tariffs, and the markets are going to price the tariffs in eventually, because they're going to become oversold. The markets don't keep going down forever. They find their bottoms and then they start moving up. Very good sign. Here's another very bullish sign, my friends. On the higher time frame with the weekly chart, the Bitcoin weekly chart, we're seeing the MACD. If you see where my mouse cursor is, it is showing bears are losing strength as the Bitcoin is starting to rise up here. And you see the green candles on the weekly chart. Very bullish. Now, if you go back a few months, going back to, I should say 4 months, to November or even October of last year, when we had that big run up, you saw the bears were losing momentum towards the end of September. And then October, the green candles started on the MACD here, and that coincided with the massive pump we saw. Same thing playing out here, right? I'm seeing the data showing me this now, not my feelings or emotion, guys. I'm saying that because people get very emotional about these things when they shouldn't be. We don't invest our emotions. So you see the MACD showing the bears are losing strength with the red candles diminishing, becoming, they're not dark red anymore. That's how it's displayed. And then it goes into the green, guys. So things are setting up beautifully here. Now, you may say, okay, Tony, but this is only one or two factors you're showing here. Okay, let's look at other data points. The DXY crashing. Guys, it is below 99. It's currently at a 98. This is bull market setup right here. The DXY historically, and this is correlated to the stock market, when it is down and is crashing, risk assets are moving up. Now, there is a macro factor of the tariffs slowing things down, and there's a bit of a lag. So you have to understand that. But this is not a bear market setup for risk assets, and that includes crypto and the stock market. This is bullish. And then you look at global liquidity, it is surging. It's breaking out. We see China and different central banks are printing, and I expect the United States to print sometime this year. They've already done some liquidity injections from the Treasury General account, but we need the signal from Jerome Powell and the Fed, and we know they have just ramped down QT significantly. So what comes next? QE. Now, they may not call it QE. They may name it something else, but it doesn't matter. As long as it contributes to liquidity going up, risk assets will follow, guys. This is what we've seen historically. It's the data. And you throw into the mix, whales are buying. So look at this. Abrax Capital linked wallet withdraws 505 Bitcoin from Binance, adding to a $250 million haul over 4 days. So people who are tracking the on-chain data, and you may say, well, Tony, why didn't this move the price? Why isn't Bitcoin pumping like crazy? They buy OTC. They don't buy, or even if they buy off the market, they buy in small increments. They don't put a buy order for 500 Bitcoin because then everybody can pretty much, see what's happening. They buy in small increments, or they buy OTC. So people who know the wallets are linked to these respective institutional investors are tracking it, and they're seeing the movements of the Bitcoin guys. Incredible stuff. And the data I've been showing you from our partner Sentiment, I've been showing this to you guys for years, right? And it's been in our newsletter. Bitcoin whales with wallets of 10 or more Bitcoin continue to accumulate. Look at the chart here. Despite the drop we saw, a bit of a sell-off in late February into early March, then a plateauing, then a spike, and a continuation of accumulation. I mean, this is the data. Look at what it's telling us, guys. And as I've been writing in my newsletter, the whales know something. They know the guys who are connected, and these are the guys that move the market. So I'm following this data, and it's helping me to navigate the market, guys. And you throw into the mix the fear and greed index. The market has been in a fear zone. These are all conditions that are conducive to higher prices and a bull market. Now, if you have fear in a bear market, it's not bullish. But in a bull market, when there hasn't been an invalidation of the bull market, this is so bullish that people are fearful in a bull market. So the same crowd, the same herd will FOMO in. It's the same story over and over. Now, count yourself lucky if you have learned, and hopefully I've helped you to learn how to navigate these markets, even as hard as it is, that you are not panic selling and you're not panic buying. You're hodling, you're dollar cost averaging in, and you have a macro view. That will pay off beautifully. And I want to share this video from Warren Buffett. It was just circulating the other day. I picked it up on April 16th, and it pretty much talks to what is happening right now. Let me play it for you.
People behave very peculiarly in terms of the reactions because they're human beings, and they get excited when others get excited. They get greedy when others get greedy. They get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime, and securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich. And you won't have to be very bright. I mean, I'm sure you are, but it doesn't take brains. It takes temperament. It takes the ability to sit there and look at something. When I started out in 1950, I would go through and find things at 2 times earnings, and they were perfectly decent businesses, and people wanted jobs at those companies, and everybody knew they were going to be around, and they wouldn't buy them at 2 times earnings, and that's when interest rates were 2.5%. I started selling securities when I was 21, and a Kansas City life insurance company happened to be a fairly prominent company in Omaha, and the policies they sold you, if you were buying life insurance from them, had a built-in assumption of 2% interest. The stock of Kansas City Life was selling at less than 3 times earnings. You were getting 35% if you bought the stock. No question about the soundness of the company. I went to the local agent. I figured, hell, I ought to be able to sell him a few shares of stock. I mean, the guy ought to understand it. I mean, he's got his whole life invested in this company. I went to the local agent who'd been with him for 20 years, and his name was Moose. I said, Mr. Moose, I said, you're selling these policies with 2%. You may even have a few members of your own family, and you can buy into this company whose paycheck you depend on every month, and whose future your beneficiaries of these life policies depend on, and who you're selling them, a 2% investment on, and you can get 35% on your money. And he said, stocks aren't any good, and I couldn't sell you. I was a lousy salesman. I mean, well, you have to start with that, but it just blew me away. It blew me away. I thought, sometimes I used to wonder if I was nuts.
So notice the big takeaways he talked about, and temperament, right? If you detach yourself from the crowd, you'll get rich, he said. Now, it doesn't mean you're going to become a multimillionaire like him, but you could make money, right? Because it depends how much you're putting into the market, of course. And he essentially said it doesn't take brains. You don't have to be a rocket scientist, but it takes temperament. It takes going against the herd. This is why I keep saying don't be emotional about the markets. Yes, it sucks to see price going down. Yes, it's boring as hell when Bitcoin chops sideways like it has been, right? It is boring. It is annoying. And don't get me wrong, I've been here since 2016. I still feel those emotions, but I put them in check. I make sure I go to the data and say, okay, what does the data tell me? What is happening here? And then I am able to put my feelings and emotions in check, leave them at the door and say, okay, I'm still in this investment. I believe in the macro thesis and things are still in play for a bull market. And I'm just going to wait patiently. And that's the big part of investing. That is how smart money has beaten retail for years upon years, because the mainstream media also sells the fear and the sensationalism, and it gets people to panic sell and panic buy. And that's not investing, right? You might as well go play the lottery. So really great advice here. And I think timely that this has been circulating. Now, folks, the big news from Charles Schwab. Charles Schwab CEO says spot crypto trading will likely launch within 12 months. My OG subscribers and listeners, remember when I was talking about Charles Schwab, E-Trade, all of them would capitulate? I've been saying this for years. They are all going to capitulate because this is the next layer on top of the internet, and you would have to be an idiot to ignore it and to go against it. This technology is going to power the way we transact with each other. I've often said blockchains will be powering the economy, the markets, the governments. So even Charles Schwab has to bend the knee here. Let me give you the details. Charles Schwab Corp. CEO Rick Wurster, who assumed the position in January, has pursued offering spot crypto trading support to the financial services firm's clients, predicting a change in the U.S. government's crypto regulatory environment. On a recent earnings call, Wurster laid out a more solid timeline for the company's crypto efforts. He said, "Our expectation is that with the changing regulatory environment, we are hopeful and likely to be able to launch direct spot crypto trading, and our goal is to do that in the next 12 months." Imagine if you panic sold with all this tariff craziness that was going on. But these institutional investors, they don't care about this stuff. They know tariff stuff is not going to last forever. They know markets don't go down forever. They're going to bounce and recover. And they recognize what is on the horizon here and that this technology is here to stay, folks. So this is incredible. So Schwab reported a surge of 40% in quarterly profits on the call as investors rebalanced their portfolios amid the volatile market environment. Some of those investors may be looking to invest in crypto, according to Wurster. He said, "We saw a 400% increase in traffic to Schwab's crypto site recently, 70% of whom were prospects." Wow. I mean, the demand is there. This is the next macro trade, and I'm glad I'm here early. And here's what Nate Geraci of the ETF store had to say. "As I've said numerous times in the past, spot crypto trading will be table stakes for every major brokerage." I wonder if the folks at Vanguard are really questioning their decisions and what their previous CEO said. They would not touch crypto. But if they don't get on board, they will have a blockbuster moment sooner than later, because all of the assets, stocks, and commodities will all be tokenized on the blockchain and will be offered in tokenized form. And Larry Fink, CEO of BlackRock, gave the blueprint already. And he talked about tokenization as the future of finance. So expect guys like Vanguard to capitulate very soon. If not, they will have that blockbuster moment. And for those of you who don't know what I'm talking about, Netflix coming to Blockbuster saying, "Hey, let's join forces. You know, you want to acquire us?" "No, we're not going to acquire you. We love our brick and mortar stores." And the rest is history. Go research it, guys. Now, Vitalik Buterin floats swapping Ethereum's EVM for RISC-V to boost scalability. This is interesting because the EVM is used by many other blockchains, even the XRP ledger. So this is a very important update and something that could help Ethereum. And I say could because we need to see it actually work, of course. So in a new forum post, Ethereum co-founder Vitalik Buterin proposes boosting Ethereum scalability by using RISC-V as the virtual machine language of smart contracts rather than the current EVM bytecode. Buterin said the radical and ambitious idea would be the only viable path for significantly scaling Ethereum's execution layer. So adopting RISC-V, pronounced RISC-V, okay, RISC-V, that's what it's how it's pronounced, an open source processing architecture capable or comparable to its proprietary competitors like ARM and x86 could slash on-chain execution costs by as much as 100x in some cases, Buterin argues. Old style EVM contracts will continue to work and will be fully two-way interoperable with the new style RISC-V contracts, Buterin notes. So this could be big. This could be a strong narrative for Ethereum if they are able to do this as the bull market continues, and it could be the catalyst that helps ETH to rally because it's been suffering. It's taking a beating in this bull market. But, things like this could really help because what's going to happen is a lot of the liquidity that has went to the layer twos, and there's so many on top of Ethereum, the liquidity will start flowing back to ETH, the layer one, and allow more people to build on Ethereum directly versus on those layer twos. Not saying layer twos are going to completely go away. I think some of them have unique aspects, but it will help improve the adoption and usage of Ethereum's layer one. So we'll see if they're able to do this, but this could be a strong narrative for ETH, the second largest crypto in the market. So let's see what happens. Folks, that's the news. Let me know what you think. Be sure to check out our sponsor, VeChain. They are a top layer one enterprise blockchain. They're being used by many brands and companies around the globe, such as BMW, Walmart, China, PwC, and much more. They are working with the Boston Consulting Group, even the UFC and Dana White, to do some incredible stuff, building Web3 and sustainability projects and features, and they're getting global adoption. So I'm a big time advocate of this project because I'm a token holder. I have the VET token in my portfolio. I recently interviewed the CEO, Sunny Liu. So if you'd like to learn more, check out the link in the description. Also, check out my newsletter. It's 100% free. Sign up there. You can support the podcast that way. Check out my book on Amazon. It's available in paperback and digital, and my new course at mycryptocourse.com. Guys, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.